KSE 100 suffered a massive blow on Tuesday, shedding over 1,521 points. Heavy selling in commercial banks in the cement sector led the broad decline. I'm Malik, and this is your PSX Daily Brief. We're cutting through the noise to bring you what really matters. Welcome to your PSX Daily Brief for Wednesday, November 5th, 2025. In today's session, we're answering three big questions. Can positive reform news stop the bleeding from red-hot inflation? With PIA's operations completely grounded, what does this mean for its privatization? What is the biggest risk investors are ignoring from the proposed 27th Amendment? Remember, this briefing is for educational purposes only and not financial advice. The damage report. Let's get to the hard numbers from Tuesday's close. The KSE 100 closed at 161,282, down 1,521 points. That's a 0.93% drop. Volume was strong with 899 million shares traded, valued at 37.3 billion rupees. Market breadth was negative, 314 losers versus just 133 advancers. The sector movement. Which sectors were in play? Biggest drags. The worst-hit sectors by market impact were commercial banks, cement, and oil and gas exploration companies. Resilience. We saw pockets of strength in the miscellaneous sector and in investment banks. Volume leaders. Technology and communication led in volume, followed by investment banks.
Who is buying?
Now, let's follow the money. This is crucial. Who was buying and who was selling? Foreign investors, FIPI. Foreign corporates were net sellers, dumping nearly $2.0 million worth of shares. Local investors, LIPI. On the local side, the biggest sellers were mutual funds, offloading $2.9 million. The main support came from individuals, who stepped in as net buyers of $1.9 million, along with banks, which bought $1.4 million. The takeaway? This tells us foreign sentiment is negative and local funds are selling, while retail investors and banks are absorbing the pressure. Key market drivers. Now for the most important part, the drivers behind these numbers. Local macro news. And here at home, the market is digesting several key items. The bad news is inflation. The October CPI reading came in higher than expected at 6.2%, spooking the market. Adding to the pressure, foreign direct investment, or FDI, plummeted to negative $64.5 million in the first quarter. And there's major political uncertainty. News of a proposed 27th constitutional amendment, which could change the provincial tax share from the NFC, is creating a lot of nervousness. We also saw a new electricity duty slapped on heavy consumers in Punjab. The good news? The FBR chief has ruled out any new emergency taxes, and the government's economic team is talking up its progress on structural reforms. Market impact. Let's drill down to specific company news that will move the needle today. Sector risk and regulatory news. The biggest story is PIA. The airline's operations are at a complete halt after engineers suspended certifications over safety concerns. This is a massive blow and seriously complicates its privatization. Industry and M&A news. On a positive note, in the E&P sector, OGDC reported a big leap in its recovery of receivables and a strategic shift back to gas exploration. Actions and events. Finally, a quick look at today's agenda. Wednesday, November 5th. Keyboard meetings today. K Electric Limited, to consider matters other than financials. SUI Southern Gas Company Limited, annual accounts. Last day of entitlement. Ascari Bank Limited, for its 12.5% distribution. Final thoughts. So, what to watch for? First, the battle between negative macro news like inflation and any positive corporate results. Second, the reaction to news from heavyweights like K Electric and SUI Southern Gas. Third, watch the volumes. Quick recap. The KSE 100 closed at 161,282. The mood is cautious. My take? Play defense, Malik. Let the market prove it's found a bottom. That's your PSX Daily Brief. What's your biggest trade idea today? Let me know in the comments. Tap like, subscribe, and hit the bell. I'm Malik. See you tomorrow. Until then, trade smart.